They give me enough money to buy some shares of a company, right? So you have a company like Oklo, the stock is $71 a share. And let's say I buy 3,000 shares of Oklo. That costs 213,000. Let's make it 4,000. Okay, so I buy 4,000 shares of Oklo stock. That costs $285,000. Now that number is a special number in my head. Why? Well, because if you remember in that video earlier, the woman said, how much did she say that she put into that Subway? How much did she put in that Subway? Anybody remember the number? What was the number? It was very close to the number I just there go 283, right? So with 285,000, and I haven't even used any margin. If I use margin, I can actually buy a lot more of this stock. But with $285,000, I could buy 4,000 shares of Oklo stock. I could then sell stock options on Oklo. And stock options, in case you don't know, is basically you just allowing someone to pay you to own the upside of your stock. Every stock has two things that can happen. It's either going to go up or it's going to go down. It could stay the same, but it rarely does that. So what happens is you have people that will buy the option from you. They'll basically become like business partners, and they say, "Hey, if you give me, or sorry, sorry, if you here, let's do it from their perspective. If you give me the right to purchase your stock at a certain price, I will pay you for the right to do that if the stock goes past that price. So if my stock is $71, I can go in right now. I can sell an option that expires, let's say, in roughly a month, September 12th. The current price is 71.25. I could literally go out and make a business deal right now and say, okay, I will give you the right to purchase my stock for $75 on September 12th, right? So that's about a month out. So it's almost like I'm a landlord of this stock. In the case of a landlord, I own property, I collect rent. In this case, my property is shares of stock. I don't own any buildings, I just own these shares of this company. Either way, I own an asset. Assets are assets are assets. Assets generate income. So the same way I generate income from property, I generate income from stock. So I have these 4,000 shares of Oklo, right? And these shares can go up or they can go down. And there are people in the market that are willing to pay me money, thousands and thousands of dollars, just for the right to buy my stock if the price goes up. So I can sell an option with a strike price, what they call the strike price of $75. What I'm saying to that person is I'm saying, look, if the stock goes past 75, you can buy it from me for 75. And then they have to pay me money just for the right to do that. So I can sell that option. The price of that option is $5.20. I can look it up and I can say, they say, well, how many shares can you sell at that price? If I want to sell options on all 4,000 of my shares, guess how much money I would get from the market right now? Somebody just guess how much I would get. Like if I could do this on Monday. Guess how much money I would get. Write a number in the chart in the chat. This is like, think of it like rent money. So imagine I have like a $285,000 property and I'm collecting rent. How much money do you think I would get for that? Guess the number. Come on. Okay. I see 2,500, 16,000, 21,000, 12,000. Okay. The number is $20,798.29. So just by owning capital, just by having capital, I can generate $20,798 that will go into my bank account. I can take that money out and do whatever I want with it. And here's the thing, if the stock never reaches 75, then I can sell those options all over again next month.